Thanks for joining me on the Slice of Finance podcast. How are you today?
I'm good. How are you? Thanks for the time.
I'm doing well. I'm excited to chat with you today. Let's dive right in. We tend to keep these short and sweet. I'll start off with an easy one. Let's assume there's some people listening that haven't heard of Pilot. What do you tell them when they say what's Pilot?
Sure. So we do accounting and tax prep for companies, and we do it in a tech-enabled way, meaning when you work with us, you're paired with our team of accountants who are full-time US-based employees based in our Nashville office. We take care of your accounting needs, your tax prep needs. We can help out with things like AP, AR, etc. And the thing that makes us special is that in addition to being an accounting firm, we're also a tech company. So we've built a bunch of software that both we use internally, but also that we use to kind of correspond and communicate with you so that the whole experience is really modern and seamless and really is just kind of getting you what you need to run your business.
What is it about this space that for the longest time was just kind of stuck in the past? Like it seemed like for a while, right? Like we had a lot of innovation during a period of time with like the QuickBooks and everything came into fold, but like then there was a really big period of not much innovation. Why was that?
Well, I think there's strong network effects on the accounting software. So I think there are two things going on, right? One is if you think about Pilot, very intentionally, we're not selling you accounting software. We are actually doing your accounting for you. And that's like a pretty weird decision for a tech company, meaning that the average tech company would say, okay, we're going to build software that you use. And I don't know, maybe it's like an alternative to QuickBooks or something. And we could talk about kind of why that's challenging. We took the sort of contrarian position of no, we're going to own the service end to end. And there's a lot that is like honestly quite annoying and quite painful about doing that. So I'm not surprised that, historically there haven't been that many people who tried to do it. On the software itself, like there are such network effects around the general ledger. Like the benefit of QuickBooks is there's all these ecosystem partners and all this stuff integrates with it. And it's actually hard to kind of overcome that.
I 100% get where you're coming from. My first company was in the healthcare licensing credentialing space. So we basically created like the TurboTax for licensing and verifying a healthcare professional. And when we were pitching investors at the time, people would always be like, why are you also like doing the service along with providing it? Because I mean, probably similar, right? We saw an opportunity where it also becomes way more sticky and you're more helpful when you're also providing the service. It's like, we're not going to sell you just the car and you drive. We're going to sell you the service where we pick you up and it becomes much more seamless, right? So I'm sure you had a similar approach. That being said, that still comes with some early challenges. Like what were some of those early challenges and how did you get past them?
Sure. So I have a post on my Substack called Don't Start a Tech-Enabled Services Business, which is basically like there is a lot of pain associated with doing this. And there are a lot of places where you can kind of trick yourself into thinking that it's working. So first, why in general, historically, have investors not liked tech-enabled services businesses? Well, historically, the challenge with tech-enabled services businesses is that they look like services businesses, meaning that they're low margin, that they don't really scale, that it's hard to build a venture scale business. It's hard to build something that's going to be a, giant, iconic, enduring public company. And so historically, there's been this sort of visceral reaction of like, oh, services, like, I don't know, from a VC investor standpoint. So hurdle number one you had to overcome is like, can you even get anyone to fund this? And then hurdle number two is, can you actually make sure you're really building something tech-enabled as opposed to something you think is tech-enabled but is actually like not and is in fact still a services business under the hood? And I think that's the part that really gets a lot of people, which is, let's say you decide to start a tech-enabled recruiting firm, just as a random example, or let's say tech-enabled law firm. You decide to start a tech-enabled law firm, you hire some lawyers, you get your first clients, you're like, oh, it's working. Like, we have clients, people like love our service. This is great. We're on the right track. But what you've actually validated is that you can start a small law firm. You have not actually validated that you can build anything that can scale. Like the test of whether or not you can scale only really starts to kick in as you get large. So I think it's also easy to trick yourself in thinking that it's working because you see initial traction.
Yeah, you see that revenue start coming in, you're immediately like, okay, we have some traction here. But is it also the traction that you'll need to show, like for investors, right? We can get excited about that, but an investor is probably not going to get excited about that unless they can actually see there's some tech-enabled component to it. So I guess I love that post, by the way, that like that's how you worded it. Don't start a tech-enabled service business. Now, let's go at it from the other side though, like you and I were talking, because I do think it creates stickiness and it does provide when done correctly, right? It is actually solving the full problem versus just kind of another solution that gets you a little bit closer to the end goal. So let's talk about the positive side of a tech-enabled service business.
Well, look, no business owner has ever said to me, I can't wait to buy accounting software. Like, that's not the problem to be solved. The problem to be solved is I don't want to get scary letters from the IRS. I want to know how to make my business stronger. Like, you have to, if you own the problem end to end, that's where the vast majority of value is created and delivered. And I think there are two kind of things that are instructive about this, like just to demonstrate how much this is the case. If you're building software that does accounting, as an example, well, like QuickBooks is software that does accounting. And in fact, we actually do use QuickBooks under the hood for some of the stuff we do. QuickBooks costs, I don't know, $30 to $60 a month, kind of depending on the SKU and some other details. Whereas your accounting firm probably charges you several hundred or several $1,000s a month, depending on the, shape of the business. So 90% of the value, like you're able to charge, 10x what the software vendor is charging. 90% of the value is in providing that kind of end-to-end ownership of the service. And so I think the price alone kind of demonstrates that, hey, that's where most of the value is. The other way I like to think about this is like, look, Uber could have sold ride-hailing software to taxi companies, but actually providing the service end to end, really owning the customer relationship ends up being really powerful and a lot better for a variety of reasons.
Yeah, I mean, just even from a data perspective, right? For them, it allowed them to iterate at a faster pace and be able to see, what others like. If they did not own the whole process, would we have like Uber Eats? Would we have these other avenues, right? Where they
Definitely
said,
not.
well, no.
No. And also like the experience of being consistent. Like there are so many benefits from really fully wrapping your arms around the problem. And the primary benefit is it's what the customer wants. Like the customer wants someone to be accountable to the outcome. Now it's hard and annoying for a variety of reasons, but like it's definitely what the customer wants.
And then from like a financial perspective, right? Unlike the Uber example, as a business, you're always going to have that pain of when it comes tax time. Like you need someone doing your bookkeeping. You can get in big trouble if you're not doing it properly. And it's not really a role at many, especially early stage companies. You're going to bring someone on. It really is not cost effective, right? To have a full time person until you have to be like really pretty large scale to have someone focusing on only doing that, right? So, like, let's talk about your like mix as far as who you're working with today. What does that mix look like between like early stage to also maybe kind of I guess call it later stage, not like full blown, large corporation, but I'd be curious what that mix looks like for you.
Yeah, it's quite diverse, meaning we do have like, two founders in the garage that kind of just got their thing started, or like the small marketing consultancy that's like a 1 or 2 person operation. And then we have the, multi-hundred person companies that may even have a VP of finance or a controller or a CFO in-house where we work closely with them, where we kind of do the parts of the function that it doesn't yet make sense for them to bring in-house. So it's quite a broad range of customers that we currently serve. As you might expect, like there are more small companies than large companies. Like the distribution does look, kind of as you would expect it to look. But I think that's one of the interesting things about how we do what we do, which is say we work with a couple thousand companies. That already makes us one of the largest accounting firms in the US, which is like kind of hard to believe. Like N of 2000 or whatever doesn't feel that large to me, but relative to the size of, these local or regional firms, like it is actually quite large. And the benefit of that is like we've seen the movie before and we can resource it in a way that another firm can't. And that's been actually really cool to deliver to our customers to say, oh, we can do the bookkeeping, we can do the tax prep, we can do fractional CFO, we can do all this stuff for you under one roof. And that's possible because of our size and scale. And that size and scale is only possible because of the tech-enabled approach.
Now, I'm sure, given the nature of your business, there's a lot of new angles that kind of come up in where you're like, should we explore this or should we explore that? A lot of shiny red ball type moments, probably, right? Just naturally
Yes.
because of the state of your business. So, how do you decide personally, like, which ones get added to your roadmap and to your kind of future business outlook versus some that maybe get shelved for a later date?
Totally. I mean, let's talk about the 20-year vision a little bit. The plan for the company is, listen, you're a business owner of some kind. Maybe it's a tech startup, maybe it's a coffee shop, maybe it's a marketing consultancy, maybe it's a small law firm, whatever it is. There's some reason you started your company. There's some product or service you want to get out into the world, and you're excited about committing your energy to causing that to occur. And what you soon discover, kind of at all stages of the process, is like, oh, there's a bunch of back office stuff I need to do. And this is not optional. It's like not discretionary. It is important. Like big companies have huge teams of people doing this stuff, and it's generally not your area of expertise. And what you're looking for is someone to solve this problem for you. And we have initially scoped this problem to the problem of accounting and tax. But this is just as true for legal and HR and IT and recruiting and real estate and business insurance. Like in the limit, we want to run your back office for you. We want to be the AWS, not of your tech infrastructure, but of your business infrastructure, if you like, meaning we should run the back office for you. There are economies of scale of us doing it. We can do it better than you can. Like there are a variety of reasons that it makes no sense for every business owner or founder out there to reinvent the wheel when there are clear best practices and we can just do it for you. Now, again, that's like a 20+ year vision. It's like there's a lot of, I probably described 10 companies like in what we just talked about. Obviously, we can't do all that stuff today. And I think the thing that we use to think about this is, what are the things you must do to grow at the rates you'd like to grow, or to move the metrics in the way you'd like to move the metrics? And if you do not have to do the thing, you should not do the thing. And that, I think, is the guiding principle. There's lots of stuff that are good ideas that you want to say yes to, but the right answer is to say no. It's to say yes to the minimum set of things that you need to really just execute the crap out of, that you need to do a really good job at to cause the business to be successful, in the short to midterm.
I'll add one of the additional challenges too here is, so you talk 20-year vision, right? 20-year outlook for the business, not just on the tech components, but even for the service components. There's so many things that based up the decision that you make, right? Similar to with tech, you kind of need to look at what is the tech going to look like out at the very end, right?
Sure.
At our because it's so hard to build the foundation. You're not going to want to tear the foundation up. It's the same thing with the services though that you're talking about, right? There's certain services that if you don't go about doing those the right way, you almost have to restructure at a certain point, and that can create some additional headaches. So my question is, do you think a lot of founders do you think we are often way too short term in our thinking, and that actually will impact how we go about building these businesses? Because I know there's investor pressure and there's all these other factors, right? But very few people I've interviewed even talk about 20-year outlook, for instance.
Look, it really depends in the sense that I think you need to know where you are going. But I think the thing that kills most companies is not the lack of 20-year vision. It's the tactical, well, you didn't execute well, or something about your initial thesis was wrong. And so it's tough because, short-termism is bad. You do want to take the long view. And yet I think the place that most people trip is their short-term things they're doing are not working. And so they haven't even earned the right to do the long-term thinking. The long-term thinking is fun and sexy. Imagine a world where, but it's at it's usually not actually your biggest problem. Your biggest problem is usually not the business is so successful, but we don't have a long-term plan. Usually the biggest problem is the business is not successful and I need a series of aggressive short-term interventions to get it back on track.
Yeah, if you look in the startup graveyard, right, there's very few imagine a world scenarios with all of those businesses where the world they were envisioning was actually much, much better, right, with their solution. I kind of think of it in a way as you look at that 20-year plan, like you said, so it's over here, and then everything is a series of those yes or no decision trees, right, that lead up to that point. And at some point when you hit enough of those roadblocks, if the pivots don't happen, you'll never that's why they don't end up getting, because yeah, it's you bring up a good point. It's more about the tactical stuff that ends up hurting these companies versus big vision.
Now, that's not 100% true. Now, it is definitely the case that there are some very successful companies where it's clear that they had one good idea and they don't know what Act 2 is. And they struggle because they have not figured out how to unlock Act 2, and then they stop being relevant. And that's sad and unfortunate. It's also in some ways a good problem to have. If your first thing is so successful and then you're out of ideas, well, at least your first thing was so successful.
Yeah. It's I'd like to, as we begin to wrap up here, I'd love to kind of shift focus back to just really the fintech space. So, like, I just was at Money 2020 recently. It was my first time, and not so much in this space, right? But you're probably seeing more of these earlier stage startups come up in like the AI accounting or the companies that are doing FP&A. What are your thoughts on maybe some of those solutions out there, and then maybe how they impact the current space?
I mean, we're very bullish on the AI stuff, and we use it, as you can imagine, extensively internally. I think there is a question about in AI accounting, like, are we yet at a place where the AI can end to end be your accountant and just like solve the problem for you with no human intervention? My belief is the answer is no, that we're not there yet. I think we will possibly eventually get there, possibly sooner than people think, but it's clear to me that we are not yet there. And I think the people that will be best equipped to build it obviously are us because of the size and scale, et cetera, that like we have. So I think there is a lot of optimism around the AI stuff, the vast majority of which is actually fairly warranted. And yet there's a big difference between like a shiny demo and actually being able to deliver the service end to end. So I'm not that bullish on fully auto AI accounting or fully auto AI legal or whatever. I am pretty bullish on like the AI assistant. Like, oh, this is an AI powered tool that will help you, the accountant, do XYZ, or will help you, the lawyer, do XYZ.
Yeah, a full-on solution, not quite there yet. I do think, like you said, we'll get there eventually, but that still remains to be seen. But when you talk to people, it seems a bit different in terms of everyone kind of overestimates where we're at today with the technology, right? I kind of compare it to when people are talking about from a graphic design perspective, you can design your graphic, except you go into your graphic and it doesn't know how to put text properly on the graphic. It looks awful, right? Or there's someone with still a couple finger. We still have that issue,
Yeah,
or we can't have hallucinations when it comes to accounting too, right?
definitely.
Like those that can't happen at all. So I think we'll get there as well. And probably we'll probably get there sooner than even anyone thinks, but it depends. Like things can change, right? That doesn't mean that's not a given. So I do think your approach. This is where a tech driven, a tech service enabled type opportunity makes a lot of sense. But also, it's hard. The barriers to entry for other companies to do what you do is very difficult because not everyone is willing to do the service component for a while to get to that full tech-enabled service business. So that's really
Totally.
interesting.
Yeah, for sure.
Last question for you as we wrap up. What's next?
Oh, more same, honestly. Like, again, we're simultaneously one of the largest startup focused accounting firm. We're the largest startup focused accounting firm in the US. And yet with like n equals 2000, we're like, that's not the ambition of the business. The ambition is like n equals 10,000, n equals 100,000, like n equals a million. So it's really like there is so much involved with getting in front of the right folks and serving them well. Like that is where kind of all of our focus is going.
I love it. Well, once again, want to thank you so much for joining me here on the podcast. Look forward to future conversations and wishing you and the team all the best of luck.
Thanks. Thanks for having me. It was great to be here.